Welcome back to another explainer. Today we are cracking wide open Lesson 1 of the Jason Forex Academy's 90-day curriculum. If you've ever stared at a trading screen and just felt completely overwhelmed by all those blinking numbers and crazy charts, well, you are absolutely in the right place. Our primary goal by the time we wrap up this 90-day journey is actually very specific. I want you to completely understand exactly why you're taking a trade, not just what buttons to randomly click on a screen. We're building a rock-solid foundation of knowledge today.
Okay, let's dive into this roadmap. Today we're going to cover 1. What is Forex? 2. Why do prices change? 3. Decoding currency pairs. 4. Buy, sell, and profit. And finally, 5. Your first assignment. Let's get right to it.
Starting off with Section 1, what is Forex?
So Forex, it stands for foreign exchange. It's this massive, truly global marketplace where you swap one currency for another, like exchanging Nigerian naira for US dollars. And what's cool is this market is actually fueled by everyday activities. Think about it. When tourists travel abroad and need local cash, or when companies import goods and have to pay suppliers in a totally different currency, or even governments making international payments. In all those cases, currencies are being exchanged. And right alongside all of them are traders, participating in this exact same market, but they're jumping in specifically to profit from the changes in those exchange rates.
And listen, when I say massive, I mean it literally dwarfs the global stock markets. We are talking about over $6 trillion being traded every single day. Trillions, with a T. The sheer volume and liquidity of this market are just entirely unmatched.
That brings us to Section 2. Why do prices actually change?
Now, what's really interesting here is what actually drives these massive fluctuations. I mean, if trillions of dollars are moving around daily, why? Well, think about buying tomatoes at a local farmer's market. When absolutely everyone wants tomatoes for a big recipe, but there just aren't many available, boom, the price shoots up. But if every farmer just had a massive harvest and there's a total oversupply of tomatoes, well, the price naturally falls, right? Currencies in the Forex market behave exactly the same way. It's all supply and demand.
But, instead of weather or harvest seasons affecting our tomatoes, currencies become stronger or weaker based on real-world economic and political drivers. These are the underlying supply and demand forces for money itself. So we're looking at things like a country's interest rates, their inflation levels, employment data, overall economic growth, major political events, and just general market confidence. Those are the actual engines behind every price change you see.
Moving right along into Section 3, decoding currency pairs.
Here's the thing. You will never, ever see a currency sitting all by itself. They are always, without exception, quoted in pairs. Let's look at a really standard format. EUR/USD trading at 1.1000. So the